Did you struggle with your books in quarter four? Did you struggle with maybe your profitability or even more important than your profitability, your cash flow? If so, I've got a great guest for you coming up here. He's the CEO and founder of ConnectBooks, an accounting service that helps visualize your profits, again, your cash flow and your accounting of your e-commerce business. We're going to talk a lot about the importance of all these different aspects and why you need to have a clear picture of your books. Today's guest is Nachman Lieser. Nachman, thank you so much for joining us today to talk about accounting, to talk about ConnectBooks, talk about money, which is something I think we all need, something I think we all care about, especially if you're in the e-commerce business. So it's a pleasure to have you on.
Thank you so much. Thanks for having me. I'm
Yeah.
excited to be here.
I want to give you a chance to tell the audience a little bit about yourself. Tell us a little bit about how you got into the business, your qualifications, your background, all that kind of good stuff.
Yeah, sure. So my name is Nachman Lieser. I'm the CEO and founder of a company called ConnectBooks. ConnectBooks was started around 7 years ago. Now, the way how I got to ConnectBooks is I used to be a CFO of a large wholesale business. We they had a warehouse of around 200,000 square feet and around 50,000 different SKUs. So there was a lot of complexities in terms of the accounting and understanding the profitability and cash flow and inventory and all those stuff. So at the same time, while I was CFO, I also went to school. I do have a master's degree in accounting.
Yeah.
And then after I finished my school, ideally my track was really more a CPA firm. And it was back in, how long? It was back like in 2018, which actually, is a little bit, I mean, it kind of was pretty good then, but like a little, job market was a little similar like today, where
Hmm.
people were scared to hire. And I went for a lot of interviews and I couldn't get a job. So I decided, the challenge was like some people saw me also as a threat. Like I went to certain guys like, okay, so you're coming here for 2 years and you're opening your own CPA firm. I said, look, I'm not going to stay forever. I'm not promising you that.
Right.
That I just don't feel it's ethical to tell a guy, oh, I'm never going to open my own firm. And then a year later, just leave him, or 2 years later, leave him. So I was having a very hard time finding. And then like on the big firms, they weren't interested in me because I didn't have any tax experience. I was basically coming from a bookkeeping background, very much like CFO work is very different than taxes, more like financial accounting, accrual basis, understanding margins and profitability versus having like a tax experience, which is like, finding loopholes and, all the good stuff in the tax work and the tax code and stuff like that. So I found myself like in a very like tough spot. So I decided I'm going to open a bookkeeping company, and the bookkeeping company. So my niche in the bookkeeping space was more like not just about to do books. I wanted to have more of a relationship with the client. So we do bookkeeping like slash CFO services, with ideas more that we do the bookkeeping the right way, and then we're able to give you guidance and explain to you what's going on in your books. It's an interesting fact. The way I explain today to my customers, I explain to even to my bookkeepers who work with me, is like bookkeeping is books are the story of the business. It tells you a
Right.
story.
Right.
And the better the books are, the better the story. Not the better the story will be. That depends on the business.
Um,
But it's gonna be the story will be more clear. Like a lot of
mhm.
times, like it's very interesting also, like how do you buy like a book and like the book can have great content, but if it's not written by a good writer, it's like really boring to read. I've had books where I just couldn't read it. And then books where I couldn't put it down, not because the content was that great. It just it was written well. And the same goes with bookkeeping. If you run a P&L for last year, 2 years, if your books are, the story is really clear and the picture is there, it's enjoyable. You go it over, you could see the numbers, you see where you did better, you see where you did worse, you
Right.
understand exactly what happens. And that was our goal of bookkeeping. So I started a bookkeeping company, and then like a half year into the process, started working with e-commerce sellers. And I was going to start it off with Amazon. I was going to Amazon, downloading all different type of reports, all different type of things, and I was spending a ton of time, going through the data, doing a bunch of Excel work, and then importing it to QuickBooks. So then I came up with this idea of I would like build a program that would just automate all the work I did for e-commerce sellers. That would be something good for us. So that's where the idea of ConnectBooks came about. And so ideally we built it really just to like automate our work, like meaning I was looking more to grow my bookkeeping company, get more bookkeeping business. But then what ended up happening was we started talking to a lot of people like, hey, we use a different bookkeeping company. We have an in-house bookkeeper. So we end up splitting it in two.
Hmm.
And what we do these days is we run the software, which you can buy the software, which the idea is it will automate 70% of your bookkeeping work. So you don't have to really be constantly busy, meaning it's a lot of repetitive, and it also software is more accurate. It doesn't, there's no mistakes with it.
Right.
And it just automates and gets everything and does it right. And then we still run a bookkeeping company today as well. We do bookkeeping. We run both businesses, and the bookkeeping side actually, like the last 2 years, what we did is we focus only on the e-commerce seller. So the idea more is that we took our bookkeeping company, niched it into e-commerce. So we can either do like a full bookkeeping package from A to Z, or you can just try to do it yourself, or have a different bookkeeper do it and just utilize our platform.
Hmm. There's a lot to unpack there, but it's very interesting. It's very I know that um, we don't really myself at least, I don't dabble in the accounting side of, the partners that we work with here. I get them in the door and then I say, I hand them off to someone that, you know, takes care of growing their sales. So it's an interesting side of the business that we don't normally deal in here. So it's something that something that I don't know about. I'm usually very interested in. So I also did not do very well in my accounting classes in college when I had to take them. So, not a dig on the teacher at all. It was my fault. I just don't. I like to do the marketing sales side more than the numbers. So I respect you for that because I could not do that side of things. So, but yeah, no, so it's an interesting story. It's a great intro to you. It's a great intro to the background. The first thing, one of the questions I always like to ask is, what have, especially at the end of the year here, is what have we seen so far? What have the big changes, say AI and tariffs, how have they affected e-commerce sellers this year, and how have you guys maybe help them adapt or help them take care of that a little bit better and be more financially stable?
So honestly, um, you know, in business and in life, there's always curveballs that are going to be thrown at you, and tariffs was one of them. Not sure how to say it better. Like even great sellers who were doing well, they just got like a baseball straight in their nose, straight up.
Hmm.
That's what happened. Meaning when stuff went like up to 50%, 60% tariffs.
Hmm.
Now the thing was, what a lot of people at that point did is pull back and waited for things to settle down. But some people weren't able to. Some people had stuff already in the way. Some people had no choice.
Right.
Um, it, it was terrible. And by the way, it's not just in Amazon. I know have a friend of mine who does construction. He was importing windows from overseas. He said it cost him over $1 million, the tariffs.
I believe it.
It
I fully believe
it,
it.
it got it got hit in every way. Now,
Right.
hopefully these tariffs are not going to be like something that's going to be coming every other day. Hopefully it's going to come. It was a hard point, but what ended up happening is that what I say the part was sellers have to realize and understand how it impacts their margins. So some
Right.
sellers, some industries it didn't hit so hard. Like for example, if you're a private label seller and you have like low cost, like you bring in very low products and selling them at a higher margin, it hasn't been that brutal. I've seen some sellers who are not being brutal. I've seen some being very brutal.
Mhm.
Uh, Vendor Central is also very complicated because there you couldn't increase the price. It was actually the first time I saw like 3P be better than 1P because on 3P, everybody just shot up.
Right.
1P, Amazon would let you. So that
Mhm.
was also very hard. But people had to come up with creative ideas how to work around it and how to try to find different stuff. But you have to always be on top of the game and you have to always figure it out.
Yeah. Looking at the holiday season, how do you help people this time of year especially? We've got Q4. Of course, you've got the holidays and stuff like that, but how do you help people specifically in Q4 stay on top of their books?
Yeah, so holiday season is very different than tariffs because holiday season is something that you expect and something that you know and something that if you prep for properly, you will do well. So one of the things that I always like to do a lot of times with people, and we do it like on Prime Day, Black Friday, Cyber Monday, all these days, is that we have something called in ConnectBooks a comparison report, which
Mhm.
we can take any particular day and compare it to the previous day, previous week, any time frame, how you want to do it. And I always say comparison is not, like let's say, I mean, the first time comparison was worked well for me myself and my business. I remember when I hired my first employee, I thought that, oh, maybe I'm this great guy and I can get so much work done, and she can. And okay, fine. So I settled with it. Then, like, I started getting busier and I hired a second employee. And all of a sudden, I saw the second employee is like producing 10x in the first employee. Then I realized, hey, you just hired someone crappy. So the idea of comparison is really strong. When you take two stuff together, it will show you the good and the bad, and it will highlight all the proper pain points. It's something that sometimes if you go through a terrible stage, you don't even want to look at it. But the idea is that, let's say, for example, Cyber Monday, let's say you run a bunch of deals. What happens is, what I've seen a lot of times with sellers, they spend a ton of money on ads, they spend a ton of money on deals and all these other stuff. The sales actually go through the roof. But when they take those sales and they compare it to a regular day, not always is there better profits. I'm not
Mhm.
gonna say never. I'm not gonna say this. These are all different cases scenarios. But I'm saying, like, where, sometimes these sellers are sure they make money only Q4 and they don't make money all year. And I actually have seen sellers who lose money Q4. This is an interesting take because storage fees is 3 times the regular rate. That's the number. So, like, if, for example, we actually helped a seller understand like certain products that they make money throughout the year. So it depends on what category you are. Like toys, you obviously can do better in Q4. Home and kitchen usually doesn't like skyrocket Q4 more than during the months, meaning certain categories that are not so much related to the holiday will not skyrocket during the holiday season as much as more than throughout the year. So in that case, let's say for example, you have to be very conscious about your margin. So let's say for example, if you have a certain margin throughout the year, what might you might find yourself is that the storage fee might kill you the last few months. So this because the storage fee is so much higher than in the last few months by not. So what we did was we actually helped the client build analysis. We took let's say the last 3 months of we took let's say Q3 or Q2, and we pulled out the data, and then we took the storage fees and tripled it. And then we said, will we still make money based on these storage fees? And if not, start set. So what we did is we stopped sending an inventory for certain products. So then it gets challenging. We lose your rank. So you have to kind of play around with it. It's how I can't, I'm not just like dry accountant who's gonna say, hey, just don't send an inventory because you lose
Right.
money. But then I lose my rank, I lose even more money, right? So you have to like kind of hedge and play with it. But the worst thing to do is just like sit back and say, oh, like, I can't do anything. Like you want to like try to see how you can hedge in that part, and how you can properly work in it. Um, so then there's also, let's say, certain products what you could do is like a lot of times sellers have products that don't do well. So they just try to like liquidate. So another thing would always to look at in Q4 is that if once you make your analysis how much money you're gonna make. So like a lot of times you could see like let's say a certain product in July you could maybe break even or like, and you see this not a good product, so you're gonna try to like sell out. But
Mhm.
then the challenge is that in Q4 you're not gonna sell out. In Q4 you're gonna dip
Right.
because the store is gonna be 3 times. So then in that case, what you want to do is do like a removal order, something like that. But the real idea is to be very conscious. I would say our comparison report is probably the most powerful way where what we want to see is we want to like compare one month to the other month and say, okay, my sales actually went through higher, everything went through better.
Mhm.
You know, did I actually make more profit? That's really the game. At the end of the day, profit is key, especially today, days like now. Banks are not lending money. Banks are pretty tight these days. It's interesting because as the economy gets tighter, the banks get tighter too. Like it's not just like even at a higher interest rates, they're just not lending so fast money. They're saying no for every other reason. Rates are high, interest is expensive. So really, the key to survive these days is really just by being profitable, and when you can really like dig into it and through a comparison, that's really like the real key. I just added one more thing. We actually just rolled out the most very cool feature, which actually it was pretty complicated to build. But what we're doing now is like when you look at, let's say, December, you want to see your all the sales and the fees from that month. The challenge is that a lot of returns coming through January.
Read my mind.
Yeah, so the idea how we used to look at it was that in January, so from an accounting perspective, the right way is to book the losses in January because
Uh-huh.
that's when it occurred. And also from an accounting perspective, you want to close out your books and you don't want to be busy going back 3 months later updating your books. That's the worst thing. The worst thing is to find out, oh, 3 months later, figure out, oh, last month, I really lost money. I mean, if you made a P&L, these are the numbers, this is what it should be, and you should be confident in your numbers when you close it out by not making changes.
Mhm.
So one of the other things we did is we actually built out a report in ConnectBooks, which will take all the returns and it will um like allocate it to the order date. So for example, if the order came in December 15, but the return only came in January 15, we have a special report where you can run the sales and see the returns from those sales. So that really gives you a real clear picture in Q4. Plus, also another thing that we do, which most people don't do, is we move back the storage fees. So the way storage fees work is that Amazon charges you every 8 of the month for the previous month. So Amazon doesn't
Hmm.
like an invoice. They wait till the month closes and they say, okay, you have to pay $50,000 storage fee. And then on the 8th, they deduct it from your account. Most
Right.
people leave in that month. So let's say January 8th really belongs to December. So we push that back.
Hmm.
So that's how you have more of a clear picture. And in the Q4, it's really important because your storage fee in Q4 is 3 times the regular amount. So like if you're paying 20,000 a month, you're paying Q4 60.
Right.
So you want to see. So what I want to see is now what I'm really going to be looking at this Q4 is putting your storage fee back in December, taking all those returns back to December, and then really seeing the real picture and understanding really like, are these products making more money after all the lightning deals, after all these advertisings? I'll just add one more thing. I know I'm like just keep on going.
No, yeah, please,
Actually,
please.
I know a seller that turns off his ads in Q4, not Q4, December. He's like, yeah, sales are through the roof anyway. We don't need it.
And it works. Does that work for him?
Yeah, yeah. He's
Hmm.
look, everybody has their niches and everybody has their stuff. You know, I'm not a seller, so I can't. And like you said before, you don't like the finance side, but you like marketing and sales. I hate marketing and sales. Meaning, I like having conversations about marketing. I know I like. I'm good at sales. I wouldn't say I'm not. Am I gonna? I'm not gonna say I'm not. But what I'm saying is that in terms of like the marketing side, like I don't like to focus on it too much. Like I got it because I gotta sell,
Hmm.
but like I'd rather sit in a spreadsheet. Like if you give me a spreadsheet 10 o'clock at night, I'll do it till 4 in the morning, no problem. Like I won't even get tired. Like you can put me in that and I'll get I'll really enjoy it. Versus like in the marketing side, like I have to really get my sleep, be calm and get my full headspace to want it. So we have everybody has on their different personalities. So I'm just saying in terms of like Amazon, like I wouldn't say I'm a guru in keywords or ads. I can't tell you what when it would. I could just say what I heard once from a seller. He's like, yeah, Q4, I just turned it off. We don't need it. And that. I can't tell you what his strategy behind it is.
If it works for him, right? I mean, why not? That's actually a great segue into my next question here is, and this might be a really good, wrap up here. But my next question is simply, what do successful sellers do that? Maybe I guess it's more. I can maybe narrow this down a little bit. What do I guess really? What do profitable sellers do for their books that other ones who are struggling are not? Is it just that they are turning their ads off, in December? Is it that what are we maybe missing here that is maybe underlying that could be found on your side of the business in the books?
So I have two things to say on that. First thing is, I'll say from my own experience, I'm running my own business for 8 years. Um, I've had my ups and downs. And if somebody tells you in business they've never had downs, they're lying because it's just not possible. That's how every business goes. But the thing that would very important to business that requires a lot is persistence. Persistence is key. You want to keep on persistent. You want to keep on trucking. You want to keep on pushing, whether it's working or not. Meaning, obviously, if at some point you see like after a certain amount of time it's not working, you want to pull the plug. But the idea is the first thing is to be persistent. That's just general concept in any type of business. The next thing is also, which is also very important, and I actually do myself. Say practice what you preach.
Mhm.
Um, is that you have to really be on top of your numbers. You have to really understand at the end of the month, number one, A, did you make money? And B, if you did make money, where is that money coming from? So you want to make sure that you understand your numbers at a very detailed level. Now, if finance is not your thing, then make sure to get the person who knows how to do it. Like I have a director of marketing. I don't have a director of finance because I don't need a director of finance. I'm good at I like to do it myself. But I have a director of marketing and I listen to her and I make sure that she understands where we want to get to and that's her department. Same thing is when it comes to numbers. Either you're good if you're good at it, then most likely you will have something in place. But if you're not good at it, or if it's like working halfway, it's like if you can't answer in better your sleep, like, hey, like how much profit did I make last month? Okay, what is my overhead? What is my break even point? What is a good margin? At what margin do I break even? Like, let's say
Right.
I'll give you an example. I work with a customer and it's a very important story because I think sellers will take a lot out of it. We had a customer we were working with where they were losing a ton of money. And we actually brought them up to like a very profitable number. Okay. You're talking about moving the needle at least like from a negative 30, 40 to like a positive 40, 50. Now, one of the things is they never understood their margins at a very deep level. So what happened? Let's say, for example, let's say they were carrying like a overhead. Now they had a product that was selling at 10% margin. I told them, based on your overhead, you're not making money. He's like,
Right.
what do you mean? It's 10%. I said, but in order to break even with your overhead, you need at least 15 to 18%. And it was an eye opener for him. He was like, "What? Yeah." I said, look what you're paying your employees in the warehouse. Look what packaging is costing you. Look what rent is costing you. Look what everything is costing you. You're not making money." So then we bumped at the next product. He's like, "Oh, this product I shipped from China directly to Amazon. So I don't have any overhead." So it started getting very confusing. So maybe this product I could make less. Then there was a separate problem that he wasn't doing landed cost. So he was basically he let's say bought a product for $5 and whatever he was selling it for, and he was, let's say, hitting 10% margin. He thought he was doing well. But the challenge was that because he wasn't he didn't realize what the it was before the tariff days, but he didn't realize what the tariffs and the um shipping is costing him and all that. He didn't realize what the right number is going to be in order to make money. So what did we do for him is we said this, okay, so technically you're running two types of businesses in one account. The stuff that you ship directly from China, that's going to be category A. The stuff that you buy locally are going to be category B. So in ConnectBooks, we can set up like two different categories. So category A, where you bring it from China. So number one, we made sure to allocate the landed cost for him. So we started allocating all his landed costs. And turns out he wasn't making money on his China products after landed cost. So we told him very simple. We said, let's make it very easy. After landed cost, you got to hit a minimum 15% margin. Let's at least get that number plugged in. So we did that. We got the 15% margin straight in there. And then category B, this is where your overhead is, and this is your break-even point, let's say 20%.
Mhm.
So once he had his clear picture, his clear numbers, then came the hard work. The hard work is sitting down, going over the products and seeing,
Right.
okay, how can I make this module work? So guess what happened? Sales tanked with 20% because obviously when you move a pricing and you move stuff up, sales go down. But
Right.
guess what? The profit went up. Now there's cash in the bank. There's a couple $100,000 laying in the bank. There's money, right? So the key is really getting a very deep understanding. And I would say, when I like to challenge sales, I'm like, can you tell me where your overhead is? If you have to think for more than a second, you got a problem.
Yeah.
Because that means your books are not clear. And that goes back to what I said to you before. It's like books are it's storytelling, right? Good books will tell you the story of the business. The clearer the picture is, the clearer the story is going to be, and the better it's going to give you your numbers and better your idea. So if you understand what your break even point is, what your margins need to be, you know how much you could, let's say, for example, if a deal comes in or something goes up where you want to promote, you understand what you can do and from a real level, and all those tie back into your numbers. You'll be doing well, and you'll be doing well in Q4. You'll be doing well all year round, and you'll just constantly be growing. Constantly growing and doing it right.
Love it. What is your advice to any seller, new seller, old seller, existing seller? What is your advice to sellers in 2026 to be more on top of their books or just in general more profitable?
Well, I would say one thing that I'm very into recently is not so much about profit, cash flow.
Mm.
So basically, and I'll shoot this back at you. Like I'll ask a seller, can you tell me how much of your inventory is laying in more than 6 months? So let's do from a finance perspective. Yeah. If you have $1 million worth of inventory, how much of it is laying here more than 6 months? That's something a very important metric to understand because if you're buying a lot of inventory that's taking a very long time to sell, because it sits in your warehouse, it's tying up a ton of cash, and you're not making money. Now, the easiest metric, which I always tell people, is take a particular month, look at your cost of goods sold. So
Mhm.
let's say you're doing $1 million in sales. Let's say cost of goods sold is, let's say, $300,000,
Mhm.
right? I'm talking the cost of product, not Amazon fees, nothing, just the cost of the product.
Right.
If your cost of goods sold is $300,000, your inventory should not be more than 3 times that number. That's the max. Meaning, if you bring it from overseas, maybe you can go to 4 times. If you're buying locally, you should be ideally 2 times. But the real number, I would say, is like 3 times. That's like a good number to start with.
Right.
Like, and most people like just have no clue. Like I'm saying, okay, so if you're doing $300,000 in cost of goods sold a month, then your inventory should be around 900,000. Now, how many people will tell you their inventory at that point is going to be 2.5 million? Like, wow, you got way excess inventory, way other inventory, and then you have to start like trying to liquidate and trim, and also if you have too much inventory, it's tying up cash, you're borrowing money, you're paying a ton of interest. All that is like eating into your profits, and more more aggressive, it's eating into your cash flow. Meaning sometimes a business can sustain a $20,000-$30,000 loss. It's not the end of the world. But the challenge I see a lot of times is people can have like $1 million buried in inventory that's like really draining their cash.
I'm absorbing a lot here because it's not the world that I'm involved in. But it's very interesting to think of that equation. I have not heard that
We
before.
actually just rolled out like a few months ago like an inventory platform on ConnectBooks. And the goal of our inventory platform is we're not like ShipStation. We don't like ship orders that. It's more from a finance side. So
Hmm.
like my number one report in ConnectBooks is the inventory age, which takes your inventory, breaks it down by age. And it also not, but most certain softwares might give you age at very few do. It's because it's a very complicated calculation. I mean, we will give you age from receiving all till Amazon ships it out. Meaning you want to, like, I remember when someone told me, like, give me an FBA age from like how long it's like in Amazon. I said, the point's not how long it's like in Amazon. We want to give you an age from when you receive it till when
Hmm.
you sell. So that's like one of our like my main favorite report. And then we're going to be releasing like in the next 2 weeks inventory turnover ratios, like how fast do you spin your inventory? Like how fast are you spinning? And you know what's very interesting? I know we're over time, but I it's a really good quote. You know, Costco, I'm a huge fan of Costco, right? And you know how many SKUs Costco carries? 3,800.
Millions? How many?
No, 3,800. Like that number. That's the most recent time I heard.
What?
I mean, yeah, they don't have, walk into Costco, they have like a whole aisle of Kleenex tissues. Like that's one SKU,
Yeah.
there's a
Yeah.
ton. But Costco has a 12x turnover. Means to say that a product in Costco on a shelf does not lay more than a month. It actually is even in, let's say, for example, Walmart has 250,000 SKUs. Yeah, Walmart
Hmm.
doesn't have, has way more than Costco. So Walmart obviously is going to have a lower turnover ratio. Walmart also has a pretty good turnover ratio. Theirs is an 8x, meaning they spend it 8 times a year.
Right.
But like all these big companies are all about the data and trying to understand, like, okay, if I bring in this product, how many am I buying and how fast can I spin it in order to do it? So on ConnectBooks, what we're in middle, like it's going to be released probably somewhere around December, or probably I'd say maybe beginning Q1 is going to be our turnover ratio report. Meaning we already give you the age, but we're also going to give you a turnover ratio, how fast you spin it. And then the other thing is to be forecasting, which the forecasting will be based off historical data. But the idea is that you gotta understand how you purchase. Meaning you can't just, sometimes people like to purchase based on feelings, which is
Hmm.
not ever recommended. But the idea is that once we can show you exactly, okay, this is how the products turn over, then you'll understand better how to do your purchasing, and based on that, it's going to help you a lot with your cash flow.
It's fascinating. It's fascinating. I think the best part about this call today was that I learned that Costco has less than 5,000 SKUs. That
Yeah.
was amazing. No, everything has been really wonderful, Nachman. I really appreciate you educating me a little bit on this side of things. My buddy loves Costco. A lot of my friends love Costco. They're gonna
I
really
also,
enjoy.
I'll,
They're gonna
I
yeah.
remember.
I'm more of a Trader Joe's guy, but if I had to pick a big wholesale club, my parents used to always take us to BJ's up in the Northeast. So that's not a Sam's Club or a Costco. It's not one of the bigger ones, bigger chains. I think I don't know. Maybe it is bigger,
No,
but
BJ's here as well. I guess it goes with
yeah,
appearance because my parents
right.
always went to Costco, so I'm a
Yeah, there
Costco
you go.
fan.
There you go. I trust my parents. But I don't have one of those yet. I think I will eventually succumb to that. But we don't really buy in bulk. Our fridge is usually actually surprisingly empty. So, but I like the idea of it. I like the idea of a Costco or a wholesale club. So, but no, I really appreciate all the tips, all the advice that you gave to me, and also all the other sellers out there. I really appreciate you coming on today. I will make sure to have your LinkedIn along with a variety of different links to ConnectBooks, and their different softwares down below in the description. So make sure all of you watching out there check that out if you're in need of some financial assistance for your books. So. Nachman, I appreciate you telling us a good story about the books and why it's important to have them clear and concise.
Thank you so much, and
Yeah.
thanks for having me. It was a
Yeah.
pleasure being here.
Yeah. Thank you all for watching. I am your host, Velocity Pete, and we will see you next week.